Hello, so in this video I'm going to explain about market structure, and market structure is very important in trading and analyzing the chart. So when we are trying to trade forex, especially smart money concept, we have to first understand market structure, because market structure is the foundation of everything about smart money concept. So this is like the backbone of our strategy. So we have to make sure that we understand market structure, and in short we can actually explain like market structure is that structure of the market, the structure of the market, like the structure of human body. So we have heads, neck, hands, and everything, legs and what, that's the structure of human body. But when we are talking about the structure of the market, we have three trends. We define the market structure by the movements that we see in the charts. Okay, so we can actually see, when you look at the market, you may actually see like the market is moving to the upside. So if it is moving to the upside, that is what we call uptrend. That's the first type of the structure. We see an uptrend. We can also see that the market moving to the downside, which is what we call downtrend. And we can actually see also the market ranging, creating supports and resistance. So that is the structure of the market. So it is simple. You could actually, what do you see in the chart? Maybe you see the market moving to the upside, or maybe you see the market moving to the downside, or you see the market creating like a consolidation. So those are the structure. That is market structure. But inside market structure, we will see what we call break of structure. We will see like what we call change of character, and we will see how do we create an uptrend, and how can we actually define a downtrend or a consolidation. So this is structure here, what you can actually see here. This is an uptrend. So in this an example, we can see like the market is printing a series of higher highs and higher lows, as what you can actually see here. So this is what the market is creating here. The market is creating a series of higher highs and higher lows. Okay, so that is what you have to understand first. So you can actually see like the market is creating the higher high, and the market is creating the higher low. Okay, and for us to understand an uptrend, there are two rules that we have to understand. Two criteria that have to be filled. The first one is this, that we have to see the market moving above this previous higher high, like what you see here. You see we had this first higher high, and we have this second high here. Okay, so what we have to see the market breaking this. Okay, sorry for that. We have to see the market going what you call breaking these higher highs, like what you can clearly see here. Like this higher high was broken. You see this higher high also was broken, and this higher high also was broken. You see, that is what tells us the first criteria. The second criteria, we have to see like these higher lows being respected. They don't have to be broken. We have to make sure that they must not be broken. Okay, the higher lows. This is for an uptrend. Okay, so so that's what we have to understand when we are talking about what we call an uptrend. But when we are explaining about consolidation here, we see the market creating a series of what we call equal highs and equal lows, which is what we call support and resistance. So that is what is created when we are in a consolidation. Okay, so when you want to understand about a consolidation, you have to master this one. You have to understand that a consolidation, like the market is creating this equal highs and equal lows, which is, when we talk about these equal highs, this is a resistance to us. Okay, resistance. But this equal lows here, this is our support. Okay, you understand that? Okay, so this is consolidation. This is what consolidation means. Okay, when you're trying to understand about consolidation. Okay, so we come to what we call a downtrend. So in a downtrend, you see this series of structures like these ones here. you see like the market is creating lower highs and lower lows. Okay, so when we are creating lower highs and lower lows, what we have to understand is this: we have two criteria. That is just the opposite of an uptrend. So in a downtrend, we have to see the market breaking these lower lows, okay, breaking these previous lower lows, and we have to see like the market respecting the lower highs. This one, they must not be broken. Okay, I hope you understand that. Okay, so that is what you can simply identify clearly and simply understand about what we call market structure. But we have what we call these points here. Okay, when we are moving to the downside, we have these points. Okay, you can clearly see like the market creating this type of structure if it is moving to the downside. So these levels here, this is like the market is breaking these levels. Okay, so here we are creating lower lows, and this is lower high. Okay, so lower low, lower high, lower low, lower high. Okay, I hope you understand. So that is how we can simply identify these structures here. But what we are trying to explain here, okay, what we're trying to explain here is about what we clearly can say, how do we identify like a movement. So we see these movements here, and this is where we are trying to understand about the swing points. So swing points are those points where we actually see like the market is turning. Okay, like here you can see the market was moving up, and then when it reached here, it turned to the downside. But when it reached here, it turned to the upside. And then when it reached here, it turned to the downside. And when it reached here, it turned to the upside. So these are swing points where you see like the market is turning. The area where the market is turning. Those are the what we call swing points. Okay. Then we have this structure here, which is going to help us identify an uptrend. So this is an uptrend. Okay, this is an uptrend. Okay, this is an uptrend. Okay, an uptrend. This is an uptrend. So you see the market creating a series of what we call higher highs and higher lows. So you can clearly see them here, like the market is creating higher highs and higher lows. Okay, you see them here. Okay, so how we can see them is by, you can actually try to draw them. You can actually see like the market went there and then it went down, went there, came down, went up. Okay, came down here, went up again. Okay, so that's how we can actually simply try to understand this. Okay, look at this structure here. You see the market moving to the upside, and you see the market creating a series of higher highs and higher lows. Okay, you see them. You see the market creating a series of higher highs and higher lows, and you see the market breaking the higher highs and respecting the higher lows. Okay, so that is an uptrend. Okay, when we are in a downtrend, we see the market creating a series of lower highs and lower lows. Okay, this is what you can actually see in this chart here. Okay, so you see the market creating lower highs and lower lows. Okay, this is a structure here. Okay, this is a structure. You will also see like the market is continuously breaking the lower lows and is respecting the lower highs. The lower highs will not be broken. Okay, the lower highs will not be broken. So you have to see the market breaking the lower lows continuously. Okay, you see like the market is breaking lower lows but is respecting lower highs. They must not be broken, the lower highs, in a downtrend. Okay, so this is consolidation. You see the market creating equal highs and equal lows. Okay, you understand that? So you see the market creating equal highs and equal lows, like here and here. Okay, the market is moving, creating like is ranging. Okay, so this is what we call a consolidation. Okay, that's a consolidation. Okay, I hope you understand that. So we come to a very important part, which is called the break of structure. Okay, so I will explain this in the next